A marketing disruptor that could return 1000% on your investment in the next 3 to 5 years? Oh, yeah. Buckle up. What's up, guys? In today's video, we're going to be talking about, yep, I'm just going to give it to you up front. We're going to be talking about Zeta Global. Zeta Global is a marketing company that is using AI to disrupt other companies. And their biggest company they're going to disrupt is Salesforce, CRM. They're also kind of disrupting a little bit of what Meta is doing with ads and everything. But in today's video, we're going to be talking about this brand new acquisition that Zeta Global just made, which is kind of shaking the markets right now, especially got Salesforce shaking in their boots over there. They made this great acquisition. We're going to be going over that. We're going to be going over the public release. We're also going to be going over and watching David Steinberg's interview on CNBC yesterday. And then finally, we're going to wrap this whole video up with looking at some of the charts, looking at my brand new high five algo, which tells us exactly when to buy, trim, and sell our positions, especially when we're looking at the monthly chart for long term investing. And honestly, you're going to be pretty shocked at where Zeta is right now after a couple days of some pulling back that they're doing. Also, big news, guys. Zeta is having a Global live event in New York City. And guess who they reached out to invite to that event? Your boy, Ronnie. Yes, that is right. I'm going to be at Zeta Live next week. Me and Nick, the guy that does Retail Weekly with me every single week. We're both going to be going to Zeta Global Live. They're going to have tons of amazing stuff to show us, and we're going to be reporting on all of it. So stay tuned next week. I'm going to be reporting back with tons of insider scoops into Zeta and what they're working on. And the two biggest speakers that they're having there, Tom Brady and Serena Williams. Massive. I'm super excited for this opportunity to get out there and to see what Zeta's really working on, front and center. I'm really, really excited. So stay tuned for all that next week, guys. But let's go ahead and get into this video.
Now is David Steinberg. He's the CEO of Zeta Global. David, we're going to maybe brand this as David's Zeta Data. What do you think?
David
I
Zeta.
don't know. My wife and kids might like it, but as you've said, in the current environment, getting access to data is getting harder. And what we're seeing is more and more people looking at private indices like the Zeta Economic Index.
Yeah, because and now there's all this also, it's not just that government data may not happen, David. It's that people are arguing over the veracity. Well, they don't measure this and they don't measure that enough.
Right.
And so everybody's doing everything. When I'm looking at a company like Zeta Global and thinking, well, they have so many data points that, respectfully to the federal government and all the great people that work there, I'd rather go to you. So what are you seeing and your team seeing from the American economy?
Yeah, well, as you know, we're looking, Brian, at 242 million Americans across trillions of signals. It's a tale of two cities. The wealthy are spending more and everybody else is not. And as a part of that, you're seeing discretionary spending dropping dramatically, but you're seeing essential spending going up, which is keeping things pretty flat. I would say the single biggest theme that you're going to see in the new ZEI coming out next week is an aversion to risk. We're seeing people start to get more nervous about risk, even though we're seeing them continue to focus on retail purchasing.
Yeah, and we're looking at your graphic now. Some are up, some are down, and I see automotive down about 4 points. So you heard maybe Kate Moore at the top of the show from Citi Private Wealth saying basically we're going to be looking at discretionary travel. Sounds like you're kind of looking and measuring some of the same stuff. How much are people spending on the stuff they don't need to survive?
Right. And we're seeing that go down. We saw probably the largest drop in propensity to take down credit from July into August, a 22% drop. When people are scared to access credit, that really affects bigger items. It affects discretionary items. Whereas, once again, going into August, and then we're seeing it going into September, a little sneak peek, we're seeing that essential items are being purchased at a greater rate. So that's offsetting it and keeping the economy growing. We saw the State Economic Index go down by 4 points from July into August. You could probably see it go down a little bit more into September, but that still means GDP is growing nicely. So, we believe GDP will grow at or above 2% through the rest of the year. It might not be the 3 or 4% I think everybody would like, but we could see it eke out high twos, low threes, but it's really being driven today by essential items that people have to buy, that they continue to stock up on. And Labor Day will have a nice spark into September around a lot of the sales that retailers were doing.
Yeah.
So I think you'll see a little nice step up into September.
This lines up almost exactly with what the CEO of Malibu Boats was saying yesterday on our show, where he said they're seeing a slight hit to the borrower boat buyer, meaning the people that are not buying a boat with cash. They've got to finance the boat. He said that was wobbling. Sure, I can't remember his exact word.
That's not the greatest, guys, honestly, here. That's not the greatest that, the retailers kind of pulling back on non-essential spending. So boats, fun cars, bikes, going out to eat more, you know, the retail, they're pulling back on spending, which is a little worrisome, going into October, which is historically can have some pretty big down cycles. So we'll see what happens with October, but yeah, some worrying things.
But something like that. It sounds like your data is showing the same thing, that maybe there are some cracks starting to form in the borrowing economy, for lack of a better term.
Well, with consumers dropping their interest in credit by over 22% from July into August, I think that's pretty
That's a
bold
big
statement.
number.
Yeah, it's a big drop, right? And I think that's going to affect large items for non-wealthy people. To the CEO of Malibu's exact point, we are not seeing a major drop in cars, or other very large purchase items, because people who can afford them are buying them. The people who would have to stretch for them maybe are not buying them right now, but those people continue to spend meaningfully in essential items, which is offsetting that as it relates to GDP growth. So we think overall the economy is healthy. Although I personally, and I think we'll see this sort of aversion to risk. I don't know how a government shutdown is going to affect that further. But hopefully it'll get back open soon, and everybody will come to an agreement, and we'll get back to business here.
Imagine being able to build.
All right. No ads for us. So I thought it was a great interview by David, honestly. I haven't seen him on CNBC that much, so I loved seeing him on there. It's always great to get on CNBC for a company to get some new eyes on their company and what they're doing over there. And yeah, what they're doing is simply fantastic. I can't speak to the leadership that he has showed and his team has showed throughout all this uncertainty. And the biggest reason that this company is really undervalued and it's taken a big hit is because of a lawsuit that's still ongoing, which I believe should be getting dismissed here soon, I believe. Don't know, obviously, but yeah, once that gets dismissed, you'll kind of get that dark cloud that's over their head right now removed, and when you get that dark cloud removed over their head, you're gonna have more sunshine. When you have more sunshine, you're usually gonna have more stock expansion. So let's get straight into this acquisition that they made that I think is going to boost revenue and what they were doing. So, Zeta Global to acquire Marigold's enterprise business. Acquisition of Marigold's enterprise software business aligns with all of Zeta's guiding M&A principles. Expected to be accretive to adjusted EBITDA and free cash flow in year one. Increases penetration of Fortune 500 brands and subscription revenue, advances One Zeta model by creating cross sell, upsell opportunities to over 100 new global enterprise brands. Zeta reaffirms third quarter and full year 2025 guidance. Transaction is expected to be incremental to Zeta 2028 targets. Zeta Global, the AI marketing cloud, today announced it has entered into a definitive agreement with Marigold to acquire Marigold Enterprise software business, including Marigold Loyalty, Cheetah Digital, Celigent, Sail Through, Live Clicker, and Grow. The acquisition advances four key levers for Zeta's strategy, including expanding scale of Zeta's enterprise customer base, accelerating One Zeta model by creating cross sell and upsell opportunities, extending Zeta global reach, strengthening Zeta's financial profile. The acquired business had a cost of revenue below 30% in fiscal year ended 2025, and over 90% of its revenue in fiscal year 2025 was subscription based and highly visible. The transaction is expected to be accretive to EBITDA and free cash flow in year one. Anything else in here? There you go. This is what David Steinberg said. This acquisition fits squarely within our discipline criteria to pursue accretive, strategically beneficial M&A creates and combines business that is far greater than the sums of its parts, a true 1 + 1 = 4 opportunity. Love to hear that. By combining Marigold's enterprise marketing strength and loyalty, omni-channel engagement, and personalization with Zeta's AI-powered platform and global data assets, we expect to strengthen our combined offerings, deepen customer relationships, and deliver more value to enterprises seeking to capitalize on AI and first-party data. We also believe we will be bringing substantial benefits to Marigold's customers through our One Zeta model. We're excited about partnering with strong team at Marigold to deliver even greater measurable business outcomes for the world's leading brands. Marigold's world-class team has built technologies with a reputation for helping leading brands create meaningful data-driven customer experiences, said Michael Gordon, CEO of Marigold. Zeta, a company with significant resources that shares committed to innovation and measurable results, is an ideal home for our products, strategy, and team. And we expect this transaction will result in a greater value for Marigold's customers. I look forward to continuing to lead Marigold's SMB business while I root for the continued growth and success for our enterprise software business as part of Zeta. Main things of the transaction: it's going to be a total consideration of up to $325 million, and proceeds will consist of 100 million in cash and 100 million of shares of Zeta's Class A common stock delivered as closing. And yeah, 125 million within 3 months, amount equal up to 125 million. So they're spreading it out with different things: 100 million cash, 100 million in shares, 125 million in cash and stock in 3 months' time. And the transaction is expected to incremental to Zeta's issued Zeta 2028 plan. So very, very big. That's pretty much the gist of the acquisition, and I love it. I love this acquisition. I love a company that goes on offense when it's the right time, and I love a company that stays on defense when it's the right time. I believe right now, Zeta, after the share price just took a pummeling, the last 2 years basically, and they're coming out of that. They're getting a lot of hype around their name, and again, you don't get Tom Brady and Serena Williams speaking at your event that I'll be at next week unless you're doing some things right. Okay. So I really like where they're going with this company. I really like the things that they're doing. I like where they're integrating with all these different businesses and being that Zeta One, like that Zeta One platform they're talking about, where we are going to be your full marketing team. Everything you need on the marketing side, we are going to do for you. sales, ads, everything. We're going to take care of all of that, and we're going to use AI to drive down our SG&A. We're going to use AI to make these things cost as least as possible, give ourselves the best margins, and our users, our customers, the best margins as well. The companies that trust in Zeta. I love it. And bringing another more business to the table with this acquisition. Applaud David and that team. Absolutely amazing. Crushed it. Could not be more happy. Finally, guys, let's get into our charts here. And I just wanted to show this real quick. So we have, man, it's already 4:13. Wow, that's crazy. The market's already closed. What a day. What a day. So we have the AI or my high five algo here. I'm talking about AI. Could be ran by AI. We have the high five algo here. And ever since basically back here in 21 April, we bottomed here at $10.63. We were buying all down here. And now we've just been riding higher and higher and higher. And if we look at the monthly chart, guys, we are in. I like to look at the monthly chart when I'm investing. I like to get in down here, and I like to just, build my position down here on undervalued companies and ride them higher, and then obviously trim up here. Obviously, who wouldn't like that? Buy low, sell high. Or I like to buy low, trim high, and then keep my position for the long term. Because you can see if you were a buyer of Zeta back in 2023, and the high five algo was actually telling you to buy here at about $8.47, you ran all the way up to a massive point of $25.87. Absolutely beautiful. You gained about $20 per share on your investment, which is really awesome. And told you to trim here, told you to eject here, and now it's telling you to launch here at about $17.59. We're only sitting at about $19.23 in after hours today. And, on a technical basis, the high five algo is telling you, the flow is coming and curling up out of here, and we should get something like this. Your algo is telling you, okay, we went from bearish, now we're flipping to bullish, and now we're continuing to climb higher, right? And then our pulse, which is this red and green line, you see last time it turned red to green, we went higher, then it turned red, we came back, had this pullback, now we're flipping back to green, have our launch through our algo, we have the flow rolling up on the monthly, we also have this massive volume shelf. I mean, everything including the business and the fundamentals, are screaming that this is going to be going higher and higher and higher. My fair value for this company, my intrinsic value that I have on this name is $32 per share based on my high five snapshot. And yeah, we are only at $19.23. And your all time high is all the way up at $38.20, all the way up here. So, like I said earlier in the video, it really is coming down to this company has had this stormy cloud over their head, lots of rain, lots of gloom. And really, it's because of this lawsuit. Because of this lawsuit, and they've just been crushing earnings, crushing earnings, crushing earnings. They've been making all these moves, and they're really positioning themselves to be a massive, massive player. And also, this company is only it's $4.57 billion market cap. So when I say this company can 10x, we're only talking about a 40-some billion-dollar market cap, guys. We're not talking about, oh my gosh, guys, this company can 10x, but they're gonna have to get to a $1 trillion market cap. No, no, no. I'm talking about a sub $50 billion market cap because we're sub $5 billion market cap right now. And when we talk about a company like CRM, I know you can't see my chart right now. I just need to pull up CRM. They are a 227 billion dollar market cap. And that's after they've dropped 38% from their highs. Salesforce is down 38% from their highs, and they're still a $227 billion market cap. Zeta Global is a sub $5 billion market cap, and they're going to disrupt CRM, Salesforce. They are going to continue to disrupt and pull market share and pull clients away from Salesforce. I truly believe this because of the platforms, because of David and his team. So, man, oh man, when I tell you this is a strong 10x or more possibility, I truly mean it. And I'm positioning my portfolios with I'm putting my money where my mouth is. I'm strongly into Zeta, just like when I said I really believe in Oscar, their team, and Mark Bertolini. I believe in them, and I'm so bullish on Oscar Health. Yeah, I put my money where my mouth is. I'm buying lots and lots of shares of Oscar. I have been, and I'm buying lots and lots of shares and have been of Zeta as well. And just kind of let you know where things stand. Oscar's number one for me. No one's really knocking them off their pedestal. They're number one for my high five gem. Zeta is number two. Zeta is number two by far. Okay. So it's a 1-2 punch. Oscar, Zeta, and then like D-Lo, and then there's some other ones. And I'll be making a video on my top 5 gems, which are sub $10 billion market cap companies that have a 5 or 10x potential over the next 2 to 3 years. So stay tuned for that video coming out probably in the next week or so. But I'm going to have lots of content for you guys on Zeta Global. So if you're Zeta Global bull, or you're an Oscar bull, or you want to know more about these companies or my other gems, definitely smack that like button, hit the subscribe button. I didn't say it the whole video till right at the end, which I need to work on, honestly. But yeah, so give me a follow, give me a like, give me a subscribe, guys, if you appreciate this content, if you want to see more stuff like this. And I will catch you all in the next one. Have a great day.